global markets when it comes to shipping is crashing. In this video, we'll explain to you what is happening, and then I'm going to tell you how wrong I've been in the last few updates. Not proud of it, but hey, it's happening, so stay tuned.
Think Global Logistics.
Hey guys, welcome back to the channel. We were going to wait until the end of this month to do a market update, but things are evolving so quickly and dramatically that we thought we had to push this one out. Right now, global shipping has taken the U-turn in terms of demand, and that has had a sharp effect on pricing, especially out of China. Prices out of China hasn't just dropped, but they are crashing on a daily basis. We are already seeing ocean freight pricing from China to Australia around the 2,000 per TEU mark. My prediction, and I don't like prediction because I haven't been right the last few times, is that by October and throughout October we might even hit around about 1,000 per TEU mark. What's causing it and why was I so wrong? Well, I guess this was a tsunami of so many different factors all coming together in the perfect storm scenario. China, let's look at China, right? They produce under 30% of the global manufacturing output. But if you dive deeper into those data, in a lot of the industries which they manufacture for, they're in fact commanding over 90% of the supply. That has a significant impact in terms of the amount of output that they produce for the rest of the world. So right now they're crashing because purely demand is dropping. Well, the first very obvious reason is due to the fact that central banks around the world is trying to fight off this inflation caused by our COVID realities. And because most of them have knee-jerked and reacted too late and so forth, they are trying to pump the brakes aggressively by raising interest rates sharply. I think everyone watching this knows exactly what I'm talking about. The interest rates have gone up significantly, and that's had a real impact in the pocket as well as consumer confidence. So we have, I guess, in many ways, demand shock. And as a result of that, people are not spending as freely and they are holding off on their purchases. We've already bought enough anyway, so with this extra pressure of fear that's being instilled onto us by the media and by the central banks, raising the interest rates, what have you, that's caused an extra layer of complexity when it comes to our consumer spending patterns. So demand is dropping globally, okay? But then you look at China. China's still got COVID zero policies. So over the course of, this year so far, they have locked down many ports and cities during varying times of this year. That's had a huge impact on production output. All the ships are really, sailing very much below capacity, right? And now, even though some of them have opened up, demand has dropped. So there isn't that influx of demand to keep the vessels full and therefore allowing the shipping lines to sustain the pricing that they were demanding or commanding during COVID times. We all know the climate challenges, for example. China's gone through a massive drought. Continues to be a problem where a lot of the production has to be shut down, with people simply not being able to operate under those real climate conditions. And they couple that with energy crisis challenges, where across the cities in China they were having rolling electricity outages or power outages, which is the flavor of this year so far, because energy crisis is under the tons of everyone, especially those folks in Europe, due to the geopolitics, which has also added more weight to all of these elements. So with all of that being said, you can see the world is going through a period of adjustment and resetting, where we are trying to grapple with the hangovers of our COVID norms and our COVID realities, and then with central banks tightening their cheap money thrown to the market by raising interest rates. All of that has meant, I guess, the global economy isn't as crash hot anymore. In fact, I think certain markets, especially the ones in the US, are definitely already in a recession. But when we talk about recession, it's an interesting one as well, because I hear a lot of professional commentators talking about this isn't like any other recession, right? Because most labor markets are still fully employed. So you can't really have a traditional recession with people fully employed, and that's the only thing keeping us buoyant at this stage. However, the tide is turning. You look at the US market, for example, people are starting to losing their jobs. right? Companies are cutting their costs and they're trying to basically hunker down and prepare for the storm or the recession or the depression storm that's coming ahead towards them. And eventually will hit Australian shores as well. For taking a very famous line, winter is coming for the Northern Hemisphere and it's going to be a tough one for Europe. USA, it remains to be seen, but the signals there are not too rosy either. Rampant homelessness in most major cities in the USA, people losing their jobs, property prices crashing, interest rate going up. All of that is doom and gloom. And unfortunately, the stock market hasn't really reflected that. I mean, I think it was yesterday had a massive correction due to the fact that the inflation rates in US continues to be high, right? 8.4, I believe. But the reality of that is inflation is much higher than 8.4. By all sources that I've researched into, it's closer to 20%. With all of these being said, the economists around the world is having a very, very challenging time in trying to determine what is happening, why it's happening, what's going to be in the future, and so forth. At the end of the day, I'm just a humble freight guy, right? I've always said the best way to look at the global economy or any economy is look at the shipping price. And right now, I'm telling you, the shipping price is crashing, right? Out of China for Australia, it is crashing. And my predictions are, again, for the second time, it will get to about $1,000 a 20 foot. And to be frank, even 2 or 3 months ago, you asked me whether that was possible, I would have said no, it would not have been possible. But I am wrong, and I'm very open to admit that on my previous predictions. So with all that being said, for those of you watching who are in the international trading game, you've been wishing and hoping for cheaper prices, be careful of cheap shipping prices, because cheap shipping prices means the market is soft. There is no demand, right? The heat is out, which means that you now have to watch your stock inventory levels. Do not be overstocked. You've got to free up cash flow because the demand simply isn't there. So sometimes I always say to my clients, have the market ocean freight levels be higher, because that tells you how buoyant the market is, and therefore the demand for your products will be strong. But if the ocean price is very low and it's crashing like we are seeing, that normally signals tough times ahead, because otherwise the rates wouldn't drop as sharply as they have. Be mindful everything is going down in terms of pricing levels. So please continue to engage with your freight forwarders and making sure that your rates are updated and that your pricing that you pay are in line with market norms. Be well, make sure your stock inventory is kept in check, and happy trading.